What could you do with an extra $2 or $3 or maybe $400 each and every month for the next year? In this video, I'm going to share with you an exact formula for you to put $2 to $3 or maybe even more $100 back into your paycheck, back into your bank account every single month. Welcome to the channel. My name is Paris Clough and this is Financial Self-Reliance. I absolutely love helping people manage, protect, and grow their money. And in this video, we're going to do exactly that. This video is going to focus in on how to help you manage your money more efficiently and more effectively. I'm recording this video in April of 2022. And so one of the things that is really significant or really a big deal in the month of April is taxes are due. And a lot of people, when they do their taxes, they get a huge tax refund. Well, we're going to talk a little bit about tax refunds, why you're getting a large tax refund, and what you can do to make sure you're getting that money throughout the year so that you can use that money for more effective purposes. Let's jump in and take a look at a few statistics on lendingtree.com. So I found this article on lendingtree.com and it was updated April 11th, 2022. I did a search for the average tax return amount in the United States. There was a little bit of a discrepancy in how much it actually was, but this particular page here on lendingtree.com seemed to have a really good overview of all the different issues that I think are very important for us to discuss. So I'm going to use this particular website for my video today because I think it hits on all the topics that are really important to make sure that you understand what's exactly happening with regards to your tax refund. So the average tax refunds are $3,651. Do you realize that means that you're paying, the person who received that tax refund paid $300 a month more in their taxes than they were supposed to? Let's keep reading. 75% of US taxpayers have received a refund. That means that 75% of you are overpaying the government for your taxes. Why would you do that? Why do we overpay and then expect to get our money back later and think that that's somehow a financially literate thing to do? I don't understand that. It doesn't make any sense to me. So my recommendation is pay as little as possible, and then if you owe a little bit of money, that's fine, but keep that money in savings, keep that money in a place where you can use it and you can get access to it so that you're not in a burden. The last thing you want to do is owe the IRS a ton of money. So I kind of get it in that regard that you don't want to owe them a ton of money, but at the same time, why would you give them so much extra money that they're giving you your money back, especially to the tune of $3,600? That's literally $200 to $300 a month you could be using for more effective financial decisions and more efficient financial decisions in your own personal life. So let's take a look at this quote here by this Schulz guy. I don't know who he is, but he says some really good stuff. While it may feel amazing to get a big refund, the truth is that a refund means that you've overpaid and essentially given the government an interest-free loan for no reason. Bingo. That's exactly right. That's a big deal because that money could have been used instead to help you pay bills throughout the year, build up your emergency fund, or even pay off some debts. Now, if you had an extra $200 or $300 in your bank account right now, what would you do with it? What would you be able to do with it? Hopefully you would do wise things with it, like build an emergency fund. Hopefully you would pay off your debts. Hopefully you would then build also maybe an investment account and get yourself ahead financially. Too many people wait to the end of the year to pay off all these debts or to pay off all these interests, and they absolutely kill themselves because you're paying interest for a whole year before you get your tax refund, and then you pay off your loan. That doesn't make any sense. Or you could have been earning interest on that money. You're literally giving, as it says here, Schulz says, you've overpaid the government, giving them an interest-free loan for no reason. Would you lend money to somebody and not ask them to pay you back some interest on that? Would you give your money to the stock market and not expect to have a rate of return? Would you give your money to a savings account and not expect to have money back? Why then do you give your money to the IRS and don't require them to pay you an interest on that? This is what I'm talking about in putting more money back into your bank account. It's really cool. I think it's one of the most effective ways to put more money back into your bank account is through making sure that you're paying what you're supposed to pay throughout the year. So I don't know what state you live in, but here's a cool thing. This chart shows the largest refund by state. So if you live in Wyoming, you have the largest refund at $5,000 as an average. If you lived in Florida, the fifth person here, you had a $4,300 average refund. That means that you're almost to the tune of $400 a month. Wyoming for sure is $400 a month. And then Connecticut, New York, District of Columbia, and Florida, you're down close to $350 a month. You're overpaying. You're literally struggling financially. You don't have money to pay your debts. You don't have money to make the ends meet. You don't have money to build a savings account or to build an emergency fund or to put money aside for your retirement or your future. You have all these stresses financially, and yet you're overpaying $350 a month to the IRS. Does that make sense? Hopefully you're understanding where I'm going with this. So here we go, states with the smallest average refunds. Even the smallest average refund is $200 to $250 a month that you're overpaying to the IRS, and that's Maine, Oregon, Vermont, Iowa, and West Virginia. So I don't know what state you're in right now or what state you're planning to move to, but 71 to 82% of people received a tax refund. That means that 76 to 82% of people are struggling financially throughout the year only to receive a large financial refund of the money they overpaid to the IRS. That's their own money. They're just getting it back. And they're now finally in a position where they can take care of some of the bills that they should have been taking care of or could have been taking care of throughout the year. In this section of the page, it talks about the full rankings, and I'm going to leave a link in the description below to this page so you can check it out yourself, but this is kind of cool. It goes through where taxpayers get the largest and smallest average refunds. So it has a list of all the different states, 1 through 51, and the refunds that they're getting. And so here you see Wyoming was number 1. Average refund was $5,000, the average owed was $7,500, and only 20% of people owed money, where the 77% of people got a refund. So if you don't pay the IRS enough money, you're definitely going to have to pay them the difference. And so what if you put that money in a bank account or a savings account, especially a high yield savings account, you were earning interest on it, and then when you paid the IRS, you were able to pay them with some of the interest that you'd earned on the money that you'd been saving throughout the year. See, I am self-employed and I have to pay taxes every quarter, and then I pay extra at the end of the year. But I save and invest my money throughout the year. The money that I would have been paying the IRS, I save and invest that so that at the end of the year I have some interest, and then when I write the check to pay the IRS, I can actually use some of the interest to pay for my bill, or I get to keep my interest and I get to use that interest for what I want to use it for, or even start saving for the following year. So there's some wisdom in using your money more wisely and effectively by paying what you're supposed to pay, investing the difference, and using that investment results or those investment gains to help further you in your financial literacy and your financial goals and dreams. So how do you make the change? What are the things that you need to do right now to make the change to get $200 to $300 back into your paycheck on the following, or maybe the next paycheck after that? Well, what you need to do is you need to go down to the HR department and you need to ask them for your Form W-2, and you need to redo your tax withholdings. And on the IRS website, they have a tax withholding estimator where you can go and you can practice and you can fill in some things and you can get an idea of how you should fill that form out. Because when you fill that form out and give it to your payroll department, they're going to take out the taxes that you owe and they're going to send those checks to the IRS. Well, if you fill out that form properly, which is Form W-4, I think I said Form W-2 later. W-2 is what you get at the end of the year. Form W-4 is what you fill out and you give to your HR department or your payroll department so that they can know exactly how much to deduct from your paychecks each month. But what you do is you go to this estimator and you use the tax withholding estimator to find out exactly what your tax withholding should be. And then you put that on the Form W-4, you give it back to the HR department so they can start taking the right amount of money out of your paychecks each month. Now you're going to find that you're going to have more money now in your paychecks. When that happens, don't go on a spending spree. Don't say, woohoo, I got all this money, I'm going to go buy a bunch of stuff. Don't do that, please. If that's the kind of person you are, then please keep overpaying the IRS. Keep giving them too much money, because that's the only way that you're going to survive. If you don't have the discipline to save your own money and to put your own money to work for you, then I guess let somebody else do it for you. And the IRS, although that's kind of the worst person to do it for you, they're going to probably do a better job than if you're just going to go blow the money on stupid stuff. So when you do this, make sure that you're going to be in a position to put your discipline into place and get yourself financially ahead. So make sure that you take the time to fill out the Form W-4, go to this website, do the tax withholding estimator. When you find out exactly what the tax withholding estimator tells you, fill it out exactly as it says. Go through it and do it. Actually, it will tell you exactly how to do it, the steps to take. Put all that information on the Form W-4, turn that in to your payroll department, and start getting the money that you need to have back in your paychecks. I'll probably leave a link to the Form W-4 just in case you don't go to your HR department, or your HR department is somewhere else and you have a hard time finding it. But the irs.gov website does have the Form W-4 available for download. So I'll leave links to those in the description below. I hope you got a lot out of this video. And if you missed the last video I did, you can find it here. Go ahead and subscribe to the channel up here, and check out this video up here that YouTube thinks you might like. Thanks so much for watching. Have a great day, and we'll see you on the next one.